Morning, everyone, and thank you very much for joining me. This is the morning market review. It's Friday, it's the 2nd of December. My name is Russell Shulman, Senior Market Specialist at FXCM, and my email address is rshaw@fxcm.com. Just going to bring up the high-risk investment warning. I'll keep this on screen for a few moments. Hey, Katie, good morning to you. Hey, Anna, nice to have you on the webinar. Hello, everyone. Thank you very much for joining this morning. Just going to bring up the market commentaries disclaimer. References, MarketScope, TradingView, Bloomberg, and Forex Factory. I'm going to just read the Bloomberg and then I'll turn the camera on, which I forgot to do yesterday, but I'll do it as soon as I'm finished reading the emails. I'll just keep this on screen for a few moments. Well, this is the PCE, core PCE versus the PPI. And the first headline says, casting a wide net. US authorities are asking crypto investors and trading firms that work closely with FTX to hand over information on the company and its key figures, including founder Sam Bankman-Fried and the former head of his Alameda Research Investment arm, Caroline Ellison. Recipients of requests sent by the US Attorney's Office for the Southern District of New York include firms that frequently traded on FTX. I may have had conversations with platform executives or hold other information that might help the criminal investigation. The moves show authorities are casting a wide net as they embark on the investigation into FTX's collapse. Next headline, Biden open to Putin talks. President Joe Biden said he would talk with Russian President Vladimir Putin about the war in Ukraine if the Russian leader is serious about ending his invasion, after previously saying only Ukraine's leaders can decide when to hold peace talks. The Russians have so far shown no indication they're going to stop or slow military operations, which US officials believe will continue through the winter months. Meanwhile, shipping costs for Russian crude are skyrocketing as more tanker owners shun the trade days before stricter European Union sanctions take effect. China COVID policy pivot. China's top leaders will likely signal a more pragmatic approach towards COVID controls at a key upcoming meeting, while putting more focus on boosting economic growth. Economists say the 24-member Politburo, the Communist Party's top decision-making body, usually convenes in early December every year to set broad guidelines for economic policy for the coming year. And the last headline says test against Sunak. The UK opposition Labour Party held a key parliamentary seat in a special election, a boost for leader Keir Starmer in his first electoral test against new Conservative Prime Minister Rishi Sunak. Labour's Samantha Dixon defeated Tory candidate Liz Wardlaw in the northeast England city of Chester, winning 61% of the vote. This was triggered by the resignation of Chris Matheson. Coming up, European shares are on track to edge lower ahead of a US jobs report. So let's just go through to Forex Factory. So we've got non-farm payrolls. So we've got non-farm payrolls coming in at 3:30, ZA 1:30 UK. 10 minutes before we'll start our live trade. Okay, we'll start our live trade 10 minutes before. Other expected data include Germany's trade balance, which has come in. Okay, so exports are outpacing imports and came better than forecast. ECB's Joachim Nagel speaks. All right, let's go back here. Let's see. Hey Howard, I hear you loud and clear, and so to hear. So Howard's just saying he's got no power. The link for the live trade, yeah. So there is going to be an email that gets sent out today, but let me just get the link in the meantime, Indran. Alrighty, so the live trade's now in the chat, the link. If you guys have any issues, just let me know. What country's Howard in? He's in ZA. No power. Yeah, so we have power issues here, Anna. So his region's been hit at the moment. All right, let's take a look at the CPI versus the sorry, not the CPI, the PCE versus the PPI. So which one is which? So the PCE is the red, the PPI, which is inflation from the production side, is the black. This is actually quite a nice chart because it goes, look how far back it goes all the way back to the 60s. And what's also nice is we can see the previous stagflationary environments. Okay. There's the previous. So this is the 1970s. We had the first oil crisis, the second oil crisis. We've had an oil crisis this year, but of course prices seem to be coming down. And the question is, why is prices coming down? And it's probably coming down because of demand. There's not enough demand there. So will OPEC plus cut production? And I think there is a good chance of that. But that's besides the point. The idea here is we can see the inflation pressures coming down when the PPI drops below either. Sometimes we look at the CPI, we're looking at the PCE, which is a different calculation. The PCE is the preferred measure for the Fed. Sorry, PPI. Did I say PPE? Sorry, Katie. PPI, production producers price index, CPI consumer price index. PCE is the personal consumption expenditure. It's like the CPI, but it's a different methodology. Whereas CPI depends which methodology you're using for CPI, but it tends to hold your basket constant. Whereas PCE actually makes provisions for change in consumer behavior, and it's the preferred measure that the Fed uses. So when they say they're trying to get an average target of 2%, they're looking at PCE and they want that average. So we're at 5% here. Okay, we're at 5%. They want to get down to 2%. So we're still quite far off. But look at what's happening with the convergence here. Isn't that something that's I think potentially meaningful? We have seen that in the previous stagflationary environments, when that PCE, when the PPI crosses below that PCE, then the producer, I beg your pardon, the personal consumption expenditure series starts coming down. So we're getting to that potential crossover point, and I think once we get that crossover point, we potentially start moving down to that 2%. Now, I say potentially because it really depends on how the sticky elements react to the interest rate hikes. And we've seen that the sticky elements seem to be rolling over, but they haven't rolled over, they've just flattened. So we want to see if that's a turning point. We'll keep an eye on this. And I think that this over here is something that is worth keeping an eye on, because let's add in another chart here. We'll throw in the US 2-year, right? So this is it's a fairly good tracker of monetary policy. You can actually go down to 3-month. Let's see. I think let's try the 3-month yield. If it's not so clear, we'll use the 2-year. Okay, this is also, it's quite nice because it goes down to sort of the 1990s. We don't unfortunately have the data all the way back to the 70s. Let's just throw in the 2-year yield here. Yeah, so the data is fairly similar in terms of the yield data, so we don't get this. But the idea here, of course, is if we do get a crossover in the inflation, the producer crossing below the consumer data, then I would suggest that the terminal rate where we are, if we take a look at, I'm going to use the 2-year here. So the terminal rate's around about 5%. I think it's just short of 5% at the moment. And when Fed Chair Powell spoke at the Brookings Institution, he actually suggested a higher terminal rate. So, he suggested less aggressive hikes, so not the 75 basis points. We probably go down to the 50. But he suggested longer, and he suggested higher terminal rate. I'm not so sure that's the case. I think we're pretty close to terminal at the moment. I'm going to tag on that subject to correction, and the reason I say that is twofold. The one is, the first reason is because we're looking to get this crossover here, which I think on a technical sort of intermarket relationship is meaningful. And the second reason why I think that we're getting pretty close to terminal is because of median. Okay, so let's just bring up median. And let's just change the color here. I'll make it a blue, should be easier on the eyes. And what you're looking for here is this hook. Can you see how there's this sort of sharp hook in the median data? I would also suggest the median data is less fickle when it comes to trend reversals. In other words, because of the nature of median, because of the nature of this, it representing sort of stickiness, I would think that when it starts to show signs of moderating, that's meaningful. So I think this moderating in the median, and I think that I think we've crossed over yet. I think when we come sort of close to the dot, it looks like there's a crossover, just because I'm using two different axes here. But I think when we go out, we can see that we're pretty close to crossing over. All right. So that's the sort of economics. What does this mean for us? Okay, so let's go ahead and bring up this chart here. I want to go out to the weekly. So we're looking at Euro US dollar here first. So what we're looking at here is primary trend. Now we've seen the potential moderation in inflation, and that's really been the big deal for why the Fed's raising rates. What you can see now, we've got the euro showing this higher trough, higher peak series. And that I think is an effect of the moderation in inflation. It's the forward-looking nature of the markets discounting a more moderate inflation outlook. So the fact of the matter is, since about October, sort of maybe even mid-September, October, we've seen risk on as the predominant sentiment, as opposed to risk off. So we want to just keep an eye on that. Let's just take a look at DAX here. Okay, DAX again, it's had a terrific move up since the end of September, and I think that is an effect of this forward-looking nature of the market. It's expecting a moderation in that inflation, and I think that we've got two interesting confirmations here. Again, just to reiterate, the hook in the median and the convergence of the PPR/PCE, or we could even go, core PCE, or we could even take a look at PPR/core CPI. Although the CPR PCE have different calculations, they will be very closely correlated. So I don't think there's while I think the PCE is a more accurate series, I don't think there's a big difference sort of looking from a long-term macro viewpoint. So, okay, so how it's asking for Euro, US dollar, so, and DAX. So you can see how, just taking a look at DAX, we've got this big, long impulse move. And I'm just wondering when we get this pullback at them, because I think there has to be a pullback at some stage. I would suggest that pullback is healthy despite any sort of news headlines. And I think then it moves into this higher peak, provided the moderation in inflation continues. Just going back to, well, let's just go down to the daily. All right, so maybe we're getting to a point, maybe, I don't know, but maybe we're getting to the point where we get that correction. Why do I say that? Well, it looks to me as if the momentum is finally running out of steam. Looks like we're about to cross. And we've dropped from zone 1 into zone 2. We'll see if it goes back into zone 1, okay? But if there is some sort of moderation on the daily, well, that might be this leg of the uptrend, which we need. Okay, we need that, because if we go back to the euro, we've got the, see, the pullbacks don't have to be long. They could be, take a week, and we've got it. All we need is a lower high, lower low, lower high, lower low. Now, just note that I'm using the terms high and low because I'm looking at individual candles as opposed to peaks and troughs, which I refer to in terms of swings. So in terms of the swings, we've got higher trough, higher peak, high trough, higher peak. But what makes this higher trough is actually the lower low, lower high. I hope that's clear. So just a little slight nuance there between the I guess the words or the nouns used. All right. Let's take a look at euro on a lower basis. So this is actually looking pretty good. Now, the PCE yesterday came lower than expected, and we suggested that might be the case, or that probably would be the case. Why would we say something sort of so brazen? Well, because again, we had that hook in the median. That hook in the median, I think, is a big deal. So we now have got this 1, 2, 2, 3. We're in the midst of this 1, 2. Take a look at the momentum here. It's a nice momentum over 80. Now, how do we trade this? So non-farm payroll or non-farm employment change Friday is always going to be tricky because we very much beholden to the figure that gets released. When we do the live trade later, what I would hope for to be, I would actually hope for a weaker than expected unemployment number. Why would I want a weaker unemployment number? The reason I would want that is because we're seeing the inflation coming down, and if we're getting that inflation coming down and we get a weaker jobs market, well, that takes a lot of pressure off the Fed, and that means we're getting closer to that terminal rate. And if we're getting closer to that terminal rate, that means we are getting closer to the end of the cycle, right? Once we get to the end of the cycle, I think the portfolio managers go to town and they really start buying great stock at good prices, really cheap prices. That's what I'm hoping for. Whether we get it or not, I don't know, and we'll discuss that in more detail around the live trade. Let's just go down to the hourly here. Let's just clean up this chart. Okay, cool. So what do we have here? So we've got a nice swing here. So this is a really nice swing. And I wouldn't mind seeing a pullback to the central pivot. Again, I want to reiterate, we're very much beholden to the announcement today at 3:30 p.m. ZA, 1:30 p.m. UK. And then if we get a number that suggests dollar weakness, then maybe we get a swing off of that. Again, that's very much speculation. So we're just going to have to see what the number is when it gets printed. But there does seem to be a pullback in the momentum, right? Let's just go back to that DAX because we didn't do a full top down. Okay, we're back at the DAX. So this is interesting. So we've got this. It's a little bit of, to me, this is actually quite tough because there's a bit of ambiguity. Let's just take a look at this again. We've got trough peak. Okay, so this we're in the midst of the swing. The question is, are we getting a pullback or not? So where it gets tough is when we take a look at the daily. Well, the daily has lost a lot of its momentum. Okay, it's really drifted sideways to the point that it's fallen from zone 1 into zone 2. And you can see the stochastic here is starting to weaken. But if you take a look at the hourly, we're getting a really nice signal here. Okay, or potential signal. I don't know if we're going to get a cross here on this EMA. So let me change that to signal to potential signal. And I'll just throw in a fib. And you can see it's a 62% retracement. Again, not to suggest that 62% has any magical qualities to it, but 62% is a pretty deep pullback. Maybe there are some bulls that are interested, and it's a nice confluence of resistance turned support here as well. And we're kind of in the middle of S1 central pivot. So we're on the support side of the pivots, right? The R stands for resistance, the S stands for support. So this is one certainly to watch. Let's just take a look at NASDAQ here. Hey Viren, could you send me an email? I'll put my email address and I'll promptly respond with the link. Just send an email through to myself at this address. Okay, and I'll respond with that. All right, let's just take a look at NASDAQ. So NASDAQ's a bit of an odd one here on the hourly. I've actually got a long on NASDAQ at the moment, but might cut it because it has crossed down. It's just moving sideways. So I've got my stop underneath the S1 level here. So if we take a look at NASDAQ here, nice higher trough, nice higher peak. Okay. And let's extend it as such. Daily, we're nicely in zone 1, and we are getting to that 80 level. Howard's asking what caused the sharp upswing. So the upswing actually, this is quite odd for me. So the upswing happened from the conversation, not the conversation, the delivery at the Brookings institution, right? That's when the Fed chair spoke at the Brookings. I would have expected there to be a sort of maybe a shorter candle here, and then a longer candle when the PCE came out, but that's not the way. So the market put all the emphasis on the Brookings Institute delivery, and that's what caused the Nasdaq to really boom jump. Okay, so the Fed chair's comments there is what caused the big movement up. This looks, so we've got an uptrend on the weekly. We've got a zone 1 daily. Not sure if we're going to make this 80 or not, but it's sort of slowly grinding our way up towards the 80. If you take a look at, or we've got some sort of pattern here. So now the question is, well, what type of pattern is it? Well, based on the direction of the weekly, based on the direction of the daily, and given that this is a small pattern, probably some sort of continuation. I can see some might say, but what about this being as a potential head and shoulders? And that could be certainly the case. Just keep an eye on the angle and separation of these EMAs. If they cross to the upside and push up, then a continuation. If they angle downwards, then we've got this head and shoulders. But the patterns on the hourly really should be analyzed in terms of the longer term trends. So if you get a reversal pattern on an hourly chart, but you've got an exceptionally strong primary trend, well, the primary trend is going to trump it every day of the year. You know, in other words, even if the short term head and shoulders does cause some sort of pullback, okay, so then you get stopped out, but then you look for the next entry in. Because if the primary trend's up, the primary trend's up. All right, so let's just keep an eye. So I've got a long on this. I just want to keep an eye on this. I'm probably going to have to move the stop up. Let me just see what else we got here. US dollar, Japanese yen. It's just asked if we take a look at that. So this is not one that I trade at all. Mainly because I just don't like the influence that the Japanese government has on this. I can safely say that I ignore this pair almost, completely. There is a downtrend here. Okay, so we've got a peak, trough, lower peak, and lower trough. Okay, so you can see the downtrend here. Again, this makes sense to me because the dollar's coming down, and the Japanese yen should be way stronger than it actually is. This is just pure manipulation from Japanese authorities by defending their 10-year bond at 25 basis points. I wouldn't touch this with a 10-foot barge pole just because of the interference by Japanese authorities. We've got a zone 3. Okay, so to me it's heading in the right direction, but again, just to trust these guys. And there's a strong momentum to the downside. And then let's just take a look at oil. All right, so okay, so oil continues to trend lower. Okay, so this is not an HP, this is actually an LP. And just the lower trough. Okay. And I just wonder if the downtrend here just prompts action from OPEC Plus to come in and try and support the price here. It's a very, very obvious downtrend in terms of the lower peak, lower trough. We've got a pullback here. And we've got a an inverted sort of hammer here. So it does look as if the path of least resistance is to the downside. It does look like there's getting some angle and separation here. Take a look at that stochastic. Okay, so that stochastic's pushed into the lower quintile. So oil, I think, under pressure for the time being. Let's keep an eye on that one. All right, I think we can wrap up here. Is there any other questions? Go ahead and type those in. I forgot to turn the camera on again. I'll turn it on briefly just to sign out. All right, camera on. All right, guys, I'm going to sign out here, and then we'll have the camera on for the live trade this afternoon. Please join me for that. All right, guys, have a good morning, and we shall chat later today. Cheers. Yeah, I know, Rob. I need to keep this camera on. I just forgot the last 2 days. I've got to figure out a way to remember. All right. Let's chat a bit later. I will certainly have the camera on for the live trade this afternoon. All right, guys.